very important. Today we are starting with chapter 2, which is gross income. Now, guys, there's a whole chapter in your prescribed textbook. You will see a very, very, very long chapter that deals with gross income. And right at the beginning, I want to remind you that gross income in financial accounting is not the same as gross income for taxation purposes. You know that gross income in financial accounting, we had gross profit, add other income, that used to give you gross income. It's a different story when it comes to taxation. There's a lot of laws and rules that we need to follow when it comes to gross income. Now, guys, there is a gross income song. I believe that you've listened to this song. If you haven't done so yet, you will have to do this on your own. Unfortunately, I can't play the song. If I play it, you can't hear the sound. Now, guys, this is an American version of the gross income definition. But as you listen to that song, and it's a very a very informal way of presenting the gross income definition. But guys, as you listen to that song, I just want to remind you that the section numbers might be different for America, the UK, South Africa, and even Namibia. But as you can see from this song, it seems like gross income is a big thing that is everywhere in the world. And it's very similar to other countries in the world, and it seems like all of the people that actually pay tax, the starting point is normally gross income. So you guys can listen to this song, and like I said, it's only the section numbers and all of that, because this is an American song, so only those things are a little bit different. But the principles in terms of what need to be included, I think this guy sings about alimony and all those things. Those are all things that is also applicable to us from a South African perspective and even a Namibian perspective. Now, one of you can actually convert this song to a video clip, and then you can maybe send it in the WhatsApp group. That is just if you want to. But if you have the slides, you can just click on this song and it will actually play on your side. Now, that is on that song. Now, guys, there's a little bit of a text truth here. So Sage Box, he's the one who tweeted this, and he said, "I'm glad I learned about parallelograms instead of how to do taxes. It's really come in handy this parallelogram season." And as you can see there, this author is a bit sarcastic because I don't think there's a parallelogram season. However, I know that there is a tax season. So I think what the author wanted to say there is, you've taught me parallelograms, but you never taught me how to do taxes. And now we sit here with a tax season, and I don't know how to do my taxes, but I know what a parallelogram is. And guys, unfortunately, that is how our education systems work these days. And I've actually been on a panel before where we've proposed that high school kids, at least grade 12s or so, should be taught about tax, at least the basics, because not everyone is joining the university, but I can tell you that everyone is paying taxes, especially if you earn more than 4,166. Guys, there is a myth that only people that have a degree and all of those people are successful people. That's a lie. Yes, education is important. I am an education activist, if you want to call it that. I am all for education. I dream, sleep, and eat education. But I need to tell you that it is not just education that make people successful. In fact, a lot of people have an education, but they still don't have money, because if you don't know how to use this education, then you will probably not be a successful person, or if you know how to use it. I always tell students, education can be anything you want it to be. If it is to travel the world, it can be that. If it's a passport to another country, it can be that. So education is whatever you want it to be. Now, just on that note again, we've made recommendations because not everyone that finishes grade 12 actually come to university and all of that. However, if they earn more than 4,166 Namibian dollars in Namibia, for instance, they will have to pay tax. In South Africa, if they earn more than 6,583 rands, they will pay tax. Now, guys, let's have a look at the objectives or the learning outcomes, what it is that we need to know by the end of this lecture. So this module deals with the following concepts. So the elements of the gross income definition, the definition of resident as per the Income Tax Act, and also the days test, which is also known as the physical presence test, and then the concepts of source and deemed source, as well as worldwide income. Now, guys, in our previous chapter, we spoke about, we were just talking about, so someone is saying, let them, all right. Okay. So yes, in our previous class, we spoke about the introduction and the administration of the Act, and now we will look at the starting point. So you should be able to explain the income tax framework, starting with gross income and end with tax payable, and then you should be able to use the income tax tables. I showed you those tables last week for an individual, and you should be able to explain the difference between a deduction and a rebate. You should be able to discuss the elements of the gross income definition, including all applicable court cases. And guys, that is in red. I'm sure some of you have a question. Do we need to know all these court cases? The answer is yes. It will be in the test, it will be in the exam. Now, some of you might wonder, why do we need to know these court cases? Guys, those are South African court cases. However, Namibia also adopted a lot of those court cases. So many of them are even applicable in Namibia. So going forward next year to Tax 310, you should know these court cases. And you will understand a little later, why do we need to know court cases. Guys, taxation is tax law. You are actually in a law class. You are just, the only difference is that we are now looking at tax laws, okay? And laws have to do with court cases, interpretation notes, and things like that. So many of you guys, when you become tax experts, you will even study or advance your career with a type of a law qualification so that you can actually combine the two at the end of the day. Even lawyers, some of my friends are lawyers, they now want to study a bit of accounting because the one can't be with the other, especially if you want to be a good tax lawyer or something like that. All right. So very important, you need to know the applicable court cases. You need to know all of them. I've shared it with you. Guys, in your case, what is so nice about it is I have summarized it for you. I took all of these court cases out of the prescribed textbook and I've summarized it. I've really made it short so that you only have the facts of the case, the issue, and even what was actually the outcome of that court case, and then even the principle. So guys, all you need to do is you need to study these 28 pages for the court cases. So really, you just need to know these 28 pages for all these court cases. In fact, guys, if you can just go to, where is that one court case? This People's Store. If you look at that one, you will even see that is even a court case dealing with Walfish Bay. Now imagine So this is South African tax laws and stuff like that, or cases, but they even have a Namibian court case in their tax law. So you see, they've even, and we will get to that, but I just wanted you to know that you need to know these court cases. You need to know them. Then know the definition of a resident as per the Income Tax Act, and also the days test. We will look at the days test, and we will define the resident. And then you need to be aware of the concepts of source and deemed source. And you need to understand the term worldwide income. Now, guys, if you can see my little arrow there, it even flickers there. As you can see, we are back at the tax framework. We've already looked at this tax framework in chapter 1. And today we will now start with component 1, which is gross income. Our starting point is gross income. Our aim is to get to taxable income and then to tax that income using either the sliding scale, those tax tables that I gave you for an individual or natural person, or using 28%, it's even now 27% for corporations. So guys, but for both, in both cases, for natural persons and juristic persons, our starting point is gross income. And then we will deduct exemptions. And thus you will see, after 2 weeks, when we are done with gross income, we will even look at special inclusions, which also falls under gross income. It's not a line item on its own, but it also falls under gross income. And that is why I said gross income is a very, very long and a very comprehensive chapter that we need to understand. But you will see, once you understand gross income, all these other things will be so much easier. Now, let's start with the definition of gross income, or we say the first step in calculating a taxpayer's taxable income is to start with gross income. Okay, so the first step in calculating a taxpayer's taxable income is to determine a taxpayer's gross income. And guys, the term taxpayer, you know that this can be either natural person or juristic person. Okay, and then gross income is defined in the Income Tax Act. Now, it's always good if something is defined in the Income Tax Act, because then we know we can just go into the Income Tax Act and go find this definition and then apply it. Remember, at the end of the day, it is important that you should be able to apply. You should be able to apply. And we say gross income is defined in the Income Tax Act and can be distinguished between the preamble to the gross income definition, and that is chapter 2 that we are looking at, and also the amounts which are specifically included in gross income. Now guys, preamble just means a preliminary or preparatory statement or an introduction. So you can just say the introduction to gross income or to the gross income definition. And that is what we will be discussing in chapter 2. Now guys, I think I've changed this to module 2 and module 3. I think it was module 3 and module 4. So please make those changes on your slides. I've changed this morning. Now guys, the Act, as we mentioned already, gross income is defined, and gross income is defined in section 1 of the Income Tax Act of 1962, Act 58. So section 1 define gross income. And when I talk about the Act this semester, I am referring to the Income Tax Act. So when I talk about the Act, I'm talking about the Income Tax Act. Remember, there is also the VAT Act. There is also other acts, but when we talk about the Act for this chapter, for purposes of this chapter, and even this whole semester, since you won't be looking at VAT, then I'm talking about the Income Tax Act. Now, this Act defines gross income as follows. It states that in relation to any year or period of assessment, And we know what is a year or period of assessment, okay? We even know when it starts, we even know when it ends for a natural person and for a corporation. Okay, so they say in relation to any year or period of assessment, in the case of any resident, and then they define to us what is this gross income for a resident. It is the total amount in cash or otherwise. So guys, if you just leave out total, I will already mark you wrong, because there's a difference between the amount and the total amount. Total amount, worldwide income, okay? Amount, that can mean that it might not be your worldwide income. So I'm trying to tell you that you should know this definition by heart. If someone wake you up at night, 12 o'clock, asking you, define gross income, you should give them this definition. The total amount in cash or otherwise received by or accrued to or in favor of such resident. Now guys, that is in terms of a resident, but let's look at a non-resident. Other than a resident, that just means non-resident. So in the case of any person other than a resident, or just put there, in the case of a non-resident, we say, once again, it will be the total amount in cash or otherwise received by or accrued to or in favor of such person. But very important, guys, there's a part that follow. From a source within or deemed to be within the Republic. Guys, you know, for a resident, they pay tax on their worldwide income. For a non-resident, they only pay tax on source, on South African source. Okay, so source within or deemed to be within the Republic. And then guys, this part here at the bottom is applicable to both. It's applicable to non-resident and resident during such year or period of assessment, but excluding receipts or accruals of a capital nature. Now guys, that is also a long discussion on its own. So if you are asked to define gross income, you will say it's the total amount in cash or otherwise received by or accrued to or in favor of such resident, or basically just continue to say during such year period of assessment, excluding receipts or accruals of a capital nature. Or in case of a non-resident, it is the total amount in cash or otherwise received by or accrued to or in favor of such person from a source within or deemed to be within the Republic, excluding receipts or accruals of a capital nature. And that is how you need to know it. But guys, it's not enough for us to just know that definition. In fact, that definition comprises of a lot of things, and I want to call them puzzles. There's a lot of puzzles that actually builds the definition of gross income. And we will look at these puzzles individually. Okay, so total amount. And we will define what do we mean with total amount. In cash or otherwise, that's another puzzle. Other than a resident, we know that means non-resident. And there are certain things that must be included, but please keep that one just at the back of your mind for now. It was the thing that I mentioned earlier where I spoke about special inclusions, but for now, just hold that in the back of your mind. Okay, then capital, we know it should exclude capital receipts, exclude receipts or accruals of a capital nature. Then we know we have resident, we have year of assessment. What is the year of assessment? And guys, these things we have already actually touched on them in chapter 1. Received by or accrued to. Guys, we need to determine when did you now actually receive this money, and even accrued to. You know, in financial accounting, we have the accrual basis of accounting, where we say that we don't just record transactions when there's a flow of money. We record transactions when it actually occur. Okay, so accrue. When it accrue means that it's outstanding, it's due. Okay, so we need to also define that for tax purposes. And then lastly, we will even look at South African sources or even deemed South African source. Now guys, the South African tax administration or tax laws is so comprehensive that they even say that if it is not clear whether it is a South African source, you must even look at deemed source. Now in simple English, deemed just means that even if it look like a South African source, you might have to pay tax on that. So deemed to be a South African source. Okay. Now guys, they say the term year of assessment and resident have been defined in the Act. However, none of the other terms in the gross income definition have been defined. So guys, resident and year of assessment, those two were defined in the Act. However, all these others have not been defined in the Income Tax Act. And we will have to look at, so how will we deal with it? What reference will we actually look at if we deal with these others? Now guys, here's just a little table and just a comparison for those little puzzles that you just saw there to see how they are applicable to residents and how they are applicable to non-residents or a person other than a resident. During the year or period of assessment, applicable to both. Total amount, applicable to both. In cash or otherwise, applicable to both. Received by or accrued to or in favor of, applicable to both. From a South African source or deemed South African source, this is not applicable to a resident. Why not? Because a resident pays tax on their worldwide income. However, it is applicable to a non-resident. Guys, I almost want to say that is the difference between the definition for a resident and the definition for a non-resident, is that non-residents only pay tax on South African sources or deemed South African sources, while residents pay tax on their worldwide income. And then excluding receipts or accruals of a capital nature, once again, it is applicable to both. Now guys, it's important to note that all of the requirements of the gross income definition, so all of the requirements of the gross income definition, if you are dealing with resident or person other than the resident, so all the requirements must be met before an amount can form part of gross income. If one of the requirements are not satisfied, the amount cannot be gross income and hence cannot be subject to normal tax. Now guys, don't get this wrong. When we say all the requirements should be met, and if one is not met, then the person will not be subject, or the person doesn't have to pay, the person doesn't have to pay normal tax. It doesn't simply mean that the person won't pay any taxes. Yes, the person might not be liable for normal tax. However, a person can still be liable for other taxes such as withholding tax or dividends tax and things like that. I need to reiterate this because we in chapter 1, we have looked at the different types of taxes. And here we are now dealing, when we are dealing with gross income, you are dealing with normal tax. And what is normal tax? That is basically normal tax. We spoke about this. We said that is actually income tax. So that is just one type of tax. So I'm saying if the gross income definition is not met, yes, the person might not pay income tax. Yeah? The person might not be liable for income tax. However, that person can still be liable for other taxes such as withholding tax or dividends tax or things like that. It's very important that you got that part. Now guys, in applying the definition of gross income, the starting point, so when we start our car, our little car, the starting point for the application of the gross income definition is to determine the following. We need to look at whether it is a resident or a non-resident. So guys, and they've included I've included that little house there for you to actually look at resident or non-resident. Guys, if you are a tax advisor or a tax expert, when your client approach you, the first thing that we will ask them is whether they are resident or non-resident. And in most cases, they will give you the wrong answer. They will give you the wrong answer. Why am I saying they'll give you the wrong answer? Because people think that resident is just where you were actually born. If you were born in Namibia, then you are a Namibian resident. If you are not born in Namibia, you are a non-resident. But for tax purposes, it is deeper than that. It goes deeper than that. We need to look at more things to determine whether someone is a resident for tax purposes or a non-resident for tax purposes. But just note that that is the starting point. Now, guys, I've been talking a lot. Let me quickly just see if you guys are still fine, if you are following, and if you guys can still see my screen. Yes?
Yes, sir.
All right, so we are still following, okay? So let's continue then. So that was our starting point. Now, guys, in determining whether a person is a resident or non-resident, we actually need to look at certain things. Now, earlier on, I told you resident is actually defined in the Income Tax Act. So a resident is defined in Section 1 of the Income Tax Act in the case of a natural person, and they define it as either a person who is ordinarily resident in South Africa or a non-resident who has spent a certain number of days in South Africa. And here we are talking about the physical presence test. So guys, we say resident, it's defined in the Income Tax Act in Section 1 as either as a person who is ordinary resident in South Africa or a non-resident who has spent a certain number of days. So guys, we can see for the first part there, if you are ordinary resident, then obviously you are a resident for tax purposes. If you are non-resident, we say no, that doesn't mean you are you will not pay any taxes. We will look at the physical presence test to see whether you've been in South Africa for a certain number of days, and if you pass this test, we will actually also call you a resident for tax purposes. It is just that you will now only pay tax on source. Remember that definition for gross income. A non-resident might not pay tax on their worldwide income, but they will still be paying tax on the source. Now, guys, very important here for the physical presence test, we say the days need not be consecutive. What does that mean? It means it doesn't have to be from 1 August to 30 August. Each day. It doesn't have to follow each other. It can be 1 day in August, 2 days in July, 7 days in June, 19 days in May. So it doesn't have to be consecutive. It also doesn't have to be from the 1st to the 9th. It can be the 1st of July, and then it can be the 12th of July and the 17th of July. I need you to understand this. The days doesn't need to be consecutive. It doesn't need to follow each other. And then a day for tax purposes can mean a part of a day. So even if it is not a full day in South Africa, you need to count it as a full day. Let me give you an example. Guys, now us Namibians, since we don't have an Namibia anymore, I'm telling you that for most flights, if you want to fly to Dubai or wherever, in most cases you will probably have to take a transit flight. What do I mean with that? You will probably fly from Hosea Kotako International Airport to our Tambo International Airport in Johannesburg, and there you will get into another plane and then you will fly to Dubai. Now that in transit, I'm telling you guys, there are some places, depending on where you are flying, sometimes you will even spend 12 hours, 15 hours at an airport, waiting for your connecting flight to move to Peru or wherever. Now that, we say that will even count as a day. That is what I'm trying to tell you there. So even if it is not a full day in South Africa, you need to count it as a full day. Because we look at maritime, you have touched ground on South Africa, and the moment you've touched, then they actually say that is a day. That is a day. That will count as a day. Whether you've been there for 2 hours or whatever, and guys, they actually have a lot of technical stuff in terms of that. You can read that on the SARS website. However, just for your purposes, note that a day for tax purposes can even mean a part of the day. And guys, what is so interesting about aeroplanes and aircrafts is that, or about flying, is that I saw a few years back, you can literally fly in the morning because it's just 2 hours from Johannesburg to Windhoek. When we once invited the UJ lecturers for our CA program, they literally flew that morning. They were flying that morning, 8 o'clock. We picked them up 10:30 at the airport. We brought them to NUST, and we were having our discussions, and that afternoon, 5 o'clock, they were actually flying back again. And that's now a very good example of Judy Boucher singing two places at once. I know the meaning is different, but definitely you can be in two countries in one day. That's what I'm trying to tell you. And for tax purposes, we say that that a part of a day would actually mean that you have been present for a full day for tax purposes in South Africa. And if a person is deemed to be a resident of another country in terms of a DTA, now guys, write down, DTA stands for double tax agreement. I'm so glad that the political party in Namibia called DTA, that they have changed their name to PDM, because in the past when we spoke about DTA as tax experts, we are referring to double tax agreements. But these people thought we are referring to the political party. So I'm glad that they've changed their name, because as a tax expert, it's like PPE, guys. You know, we know PPE is property, plant, and equipment. But since the COVID-19 pandemic, people were referring to PPE. And the first thing I thought about is property, plant, and equipment. However, we know there's a different meaning for that in the health vicinity, where it actually means protective, personal protective equipment. So very important, DTA, let me just go to that point again. If a person is deemed to be a resident of another country in terms of a double tax agreement, that's South Africa has with that other country, that person will be deemed not to be a resident of South Africa. Guys, very important. Let me just quickly talk about double tax agreements. So sometimes two countries might sign a memorandum of understanding or a double tax agreement for tax purposes and so forth. What it means is Namibians will go work in South Africa. Guys, a good example that I can give you is ambassadors. I'm sure you guys have heard of Namibian ambassadors in other countries. Last year, we even had that very big scandal of the ambassador that lived in Brazil. You know, that whole story. You can Google that video. But anyway, so having ambassadors in other countries. So that is someone from Namibia, but working in, let's say, in Brazil. So the two countries can sign a DTA, a double tax agreement, which means that, yes, although you will stay in Brazil, but you will not pay tax in terms of Brazilian laws and all of that. You will still pay your tax in Namibia and things like that. So there's a double tax agreement that we've signed to say that, because guys, what we are saying is it might be unfair. You might have to pay tax on certain amounts in Namibia and even tax on certain amounts in Brazil. And that would mean you will pay double tax, isn't it? In some cases, you will actually be required to pay twice, especially depending on whether the country is using a residence-based tax system or a source-based tax system. And because they don't want you to pay double, those two countries can enter into a double tax agreement where they actually agree that for tax purposes, you will only pay tax in one country. Now, here they said, if South Africa have a DTA in place with another country, then automatically that person will not be paying tax in South Africa. Now, guys, the term resident is defined in the Act, but the term ordinary resident might not be defined in the Act. So, guys, all this information now here was for natural persons. Okay, let's have a look at juristic persons, companies, for juristic persons or corporations. So, a resident, once again, it's also defined in Section 1 of the Act. However, it is defined as, so we see for a natural person, we said it's an ordinary resident or the physical presence test. For a juristic person or a non-natural person, we say if that person is incorporated, established or formed in the Republic or where its place of effective management is. Yes? Zenochina, talk to me. Zenochina?
We just want to ask, if it is possible that when you are working there, will you be able to pay tax in Namibia while you are working there?
Okay, thank you. So your question is it possible for someone to be to be liable for tax in two countries? The answer is yes. Like I said, depending on what system they use, whether it's residence-based tax system or source-based tax system. Because let me give you an example. Namibia uses the source-based tax system, right? So I might use Namibian sources in terms of my annuities is at Old Mutual and all of that. Okay, so automatically, obviously, I need to pay tax in Namibia. However, now I'm going to South Africa, and let's say I become a resident for tax purposes. Now I need to pay tax on my salary and all of that there in South Africa, right? So do you see I can pay taxes in two countries? I'm liable to pay taxes in two countries based on the systems that they use. However, the countries might enter into DTAs to say, we don't want you to pay taxes in two places in 1 year. We will, Namibia might say, since this person is there now, let them pay tax there in South Africa. Or South Africa might say, since it is a Namibian just working here, the person doesn't have to pay tax in South Africa. They can be liable to pay tax in Namibia, for instance. Now, I think to also understand your question, you also kind of asked, I think maybe you wanted to know, how does the logistics work? How will it work in terms of paying that tax? Basically, you will have to pay over that tax, or your employer will deduct that tax. Even though you are in South Africa, that tax will then be paid into Namibia because of this DTA. That is now, if I got your question correctly. Zenochino, can you just answer if I answered your question?
Yeah.
All right.
Yes, I what you say.
You were saying? Oh, okay. He's happy with that answer. So, guys, juristic person, do you see that we are not talking about resident and all that anymore? We are now talking about incorporated, established, or formed. So basically, where did you register that company? Where did you establish that company or formed it? And if it is established, incorporated, or formed in the Republic of South Africa, then we say that will be a South African resident company. And then, guys, but very important to note is it becomes difficult when you actually now have Yes, the company was incorporated in South Africa, but you have branches in other countries. That is when it becomes difficult now. Like Old Mutual and those places, those are all South African companies. Shoprite, Checkers, they are all South African companies. However, they are also operating in Namibia. So now we need to look at in terms of this second part here. So where is the place of effective management? Now, guys, we will define all these things, even this ordinary resident and all of that. It's not defined in the Act, but I will give you guidance, explanations on how to look for these things. So we will then have to look at effective management. So guys, if that one is not met, then automatically we have to go to effective management because it says or. And here, if that one is not met, ordinary resident, we will then have to look at the physical presence test. Now, just to give you a little flow chart, resident, in case of a natural person, we will look at ordinary resident or physical presence test. For a non-natural person, for a juristic person or corporation or company, we will look at where was it incorporated, established or formed, or we will look at the place of effective management. And we will define all of those things. Now guys, the first one that we will look at is for a natural person. Now guys, like you can see there, I've put that little heart there so that you can see that a natural person is you and me. We can feel, we have emotions, we can laugh, we can be happy and all of that, and that is a natural person. Now let's look at this decision tree for a natural person. So the questions that you need to ask is the person ordinary resident in South Africa? If the answer is yes, then we say for tax purposes, that is easy. That person will have to pay tax on their worldwide income. So guys, if the person is ordinary resident, then obviously for tax purposes, we will say, yes, you are a resident and you will pay tax on your worldwide income. Then if the answer was no, okay, is the person ordinary resident in South Africa? If the answer is no, then we will have to go further and look at the physical presence test. Now, if we look at the physical presence test, guys, we will look at the days. How many days did you spend in South Africa and all of that? If the answer is yes, you've passed the physical presence test, then we say you will automatically also become a resident for tax paying purposes. Okay. Then, if the answer is no, does the person meet the physical presence test? If the answer is no, then we say you are not a resident. You are a non-resident for tax purposes. However, guys, don't get this wrong. It doesn't mean the person won't pay tax. Remember, non-residents still pay tax based on the source of that income. Now, the first one that we will look at is ordinary resident. So, is the person ordinary resident? If the answer is yes, then we will have to look at what is ordinary resident. Now, guys, ordinary resident, it is not defined in the Act, and therefore, so guys, the moment something is not defined in the Act, we need help. We need the courts to help us, and therefore we will look at court cases, okay, and those principles laid in those court cases. Case law. If it's not defined in the Act, we will look at case law, which is court cases. And if we also don't have court cases, because, guys, not every principle have been challenged in court. What do I mean with court cases? It means someone challenged someone, isn't it? In court, there was a court case, and we need to look at that ruling. But not every principle will have a court case, and therefore SARS also came up with interpretation notes. And in this case, we will look at, for ordinary resident, we will look at interpretation note. Now, guys, please take note that interpretation note is not the law. It is not the Act. It is just guidance, and it's not binding. It is just guidance that is given by SARS in order for you to determine whether someone is an ordinary resident or not. Now, guys, ordinary resident in terms of these court cases and interpretation note 3, what we could establish for ordinary resident is that they explain it as residence merely means that a person eats, sleep, and works at a place with some degree of continuity or permanence. So guys, it's your habitual about. It's basically, where do you sleep? Where do you work? Where do you do things on a continuous basis? Where are you most consistent? Where is your permanent type of home? I almost want to go as far as saying that. So if we can determine that place where you eat, sleep, and have that degree of continuity, then you will be referred to as an ordinary resident. Now, guys, is there a question? Pasanapela Kajau, are you talking to me? Please mute your microphone. Pasanape. Let me mute you. Okay. So guys, for ordinary resident, we have 2 very important court cases. And yes, will this be in the test? Yes, they will be in the test. And very important, guys, you always have to state it correct. In this case, it was Mr. Cohen that actually challenged the CIR. In this case, it was the CIR that challenged Mr. Kittel. Now, can one person just quickly tell me, what does CIR stand for? Since you did the pre-reading, that is why it's so important to do the pre-reading. What does CIR stand for? One person? Come on. There has to be at least one person. What does CIR stand for? Does this mean nobody did the pre-reading? Are you starting? Yes, please talk to us.
I think it's a research tax credit.
Excuse me? Can you just repeat?
Is it not the research tax credit?
Wrong. Someone else, but thank you for trying. Someone else, which means you didn't read. Nah? But thank you for trying. Who else? Because if you read that chapter, it means you would have seen what CIR stand for. Someone else, what does CIR stand for? Now you see, you guys have already started with your nonsense, where you don't read.
What is the question?
Sir,
Yes, talk to us, ma'am, quickly.
it means research tax credit.
Wrong, Fanny, that's also wrong. There was a gentleman.
So it's corporate interest restriction.
Wrong, because you guys are Google. It's okay. Everyone can mute their microphones. I can see that you are busy. You sit on Google, and that's why you give me these wrong answers. Shame on you, by the way, because you didn't read. That's the point I'm trying to make. CIR stands for Commissioner of Inland Revenue. Please mute your microphone if you are not talking to us. Commissioner of Inland Revenue. And we will talk a lot about CIR. That is why you better get that right now. Ready? Guys, there's 5 minutes remaining. I'll open the floor for questions. However, I want to just tell you that it's very clear that you guys didn't read, because if you read, you would have picked up this in your textbook. And I want to warn you now already that you have started with this thing of not doing homework, and it will catch up with you. It will catch up with you. Sooner or later, it will catch up with you. Anyway, we are done with our lecture for today. I'll open the floor for questions. There's 5 minutes, 4 minutes. Please ask questions. We will continue with this lecture tomorrow again. Any questions? All right. It seems like there are no questions.
No, sir, I have questions.